Hello everyone. Most of the index in the Indian market are currently at all-time high values, especially Nifty, which is in the range of 19,500 to 20,200. So what happens next? Will this rally sustain or will it increase from the present level? Or what could possibly cause it to crash, say to 16,000 or even 17,000? Stock markets are highly sensitive to a number of factors. However, we will only concentrate on or focus on the three factors: fundamentals, inflation, and oil price. First, it is important to note that not only Nifty but the overall Indian market itself has been very positive recently. Why? What makes the Indian market special? To answer that, here I came across this very interesting table on the internet that I think is worth sharing. It shows the earnings of India's top 500 companies for the latest April to June quarter of FY 2024. Here, on year-on-year basis, revenue has grown only by about 3.5%. However, EBITDA has grown at a very healthy rate of nearly 31% and profit after tax has grown by 42%. Just imagine 42% growth in 1 year. These numbers are really phenomenal and looks very good. To some extent, it is important to remember that the first quarter of last year, FY 2023, was a very tough quarter as it was immediately after the Russia-Ukraine issue. So comparing that might give a false narrative, but despite that, the Q1 FY 2024 numbers are very good. Then if you look at the non-financial companies, which means we take out all the banking and financial companies, revenue was up by only 1%, which is almost flat. This is because last year there was an impact of inflation and now that prices are coming down, it is having an impact on revenue growth. Again, however, even though revenue growth is flat, EBITDA has grown by 27.5% and profit after tax has also grown by 38%. And also, if you look at the EBITDA margin, it has increased from 12.9% in June 2021 to 13.4% in June 2022, then to 15.7% in March 2023, and now it is 17%. This is a huge thing in the stock market, especially for a combined 500 companies. It shows that Indian companies are becoming more efficient. So fundamentally, Indian companies have delivered good results and the stock market is rewarding that with high valuations. Will the stock market go beyond this? That most probably depends on the July-September quarterly results. If either EBITDA margin improves or even if it stays at the same place, then probably this rally will continue. Now coming to Nifty, as we know, it is made up of 50 different companies from multiple sectors. As we have discussed many times, like any particular stock, Nifty too has earnings per share (EPS) and a price to earnings PE ratio. In September 2022, the EPS of Nifty was 837 rupees. Now in September 2023, it has increased to 885 rupees. This means that Nifty's earnings have grown by around 6% in the last year. However, Nifty's PE ratio has also increased in the last year. In September 2022, the PE ratio was 18.5. Now in September 2023, it is 22.5. I mean, Nifty's EPS has increased by 6% in the last year, but its PE ratio has increased by 12%. This means that Nifty is now trading at a higher valuation than it was a year ago, which means if we consider just 1 year, investors are willing to pay a higher price for Nifty's earnings. So it is clear that investors are optimistic about the Indian economy and corporate India. And also this poses some risk on the horizon, such as inflation and oil prices. However, if you look at the last 2 years, Nifty's EPS has increased by 36%, while Nifty itself has increased by only 15%. This means that Nifty is trading at a lower valuation than it was 2 years ago. And if you look at the last 10 years, Nifty has typically traded between a PE ratio of 24 and 28. Currently, Nifty is trading at a PE ratio of 22. This means that Nifty is trading at a cheaper price than it has on average over the last 10 years. So, is Nifty overvalued or undervalued? It depends on how you look at it. If you look at the last year, Nifty is overvalued, and if you look at the last 2 years, Nifty is undervalued, and if you look at the last 10 years, Nifty is fairly valued. So what happens next? This is difficult to say for sure, but the fact that Nifty is trading at a lower valuation than it did 2 years ago suggests that it has a potential to go higher. However, if inflation or oil prices increase, it could put pressure on corporate margins and lead to a slower earnings growth. This could cause Nifty's PE ratio to increase, which would make it more expensive. As I said, most of the time, big investors use the forward PE ratio to make investment decisions because it gives them a better sense of how expensive or cheap a stock is based on its future earnings potential. Now, let's see this bar chart. It shows the 10-year average 12-month forward PE ratio for different consumer inflation levels in India. If the inflation was below 7%, then the 10-year 12-month average forward PE ratio was around 17. If the inflation was 7 to 8%, then the 10-year 12-month average forward PE ratio dropped by 5.89% to 16. If the inflation was above 8%, then the 10-year 12-month average forward PE ratio dropped massively by 17.6% to just 14. To calculate the forward PE ratio for an index, we need to estimate and add every stock together based on their weightage factor. This is a huge task without programming, but we can easily find it from any famous brokerage report. For example, according to Motilal Oswal, the FY24 Nifty forward earnings are expected to be 988 rupees, and for the present Nifty value that comes as FY24 forward PE ratio of 20.3. According to CLSA ratings, since 2005, Nifty has traded at the present higher valuation only less than 10% of the time. So, in non-favorable conditions such as inflation going above 8%, Nifty might fall below a 12-month forward PE ratio of 17. A 12-month forward PE ratio of 17 is approximately equal to 16,800, and a 12-month forward PE ratio of 16 is approximately equal to 15,800. Please don't think that inflation will not go above 7 or 8%. In July 2023, inflation increased to 7.5%, and in August 2023, when inflation dropped below 7%, and that also caused the market move above 20,000. Until then, market was just waiting for good inflation number confirmation. Conclusion: the Indian stock market is currently trading at a higher valuation than it has on an average over the last 10 years. This means that there is some risk of correction, especially if inflation goes above 8%. Now let's move to oil. In India, for every $10 increase in oil price, the current account deficit for that quarter increases by 0.55%, which in turn increases the inflation by 0.3%. This is on top of the regular inflation. All of this is very bad for the Indian economy and will depreciate the rupee by 2% unless there is RBI intervention. So, as an oil consumer country, increasing oil prices are a nightmare for India. Now, comparing oil prices to Nifty, they have a very weird relationship. Sometimes they move in the same direction, direct relation, and sometimes they move in the opposite direction, inverse relation, since we export significant oil as well. I came across a research paper that explained this relationship in a very complicated way, but I'll try to explain it as simple as possible. If oil prices are within India's bearable range, let's say $60 to $100 per barrel, Nifty will move in line with oil prices. This is what happened between 2015 to 2016. However, if oil prices go beyond India's bearable range, let's say $120 per barrel or more, the relationship becomes inverse. This is what happened between 2013 to 2014. Another recent example is in May-June 2022, when oil prices increased above $110 per barrel and Nifty dropped from over 17,500 to below 16,000. So the takeaway is that oil prices are a boon for the Indian economy if they stay within a certain range, but if they exceed India's bearable range, they become a bane. Summary: the Indian stock market is increasing because of good strong fundamentals, and at the present moment Nifty is in a favorable normal PE ratio based on the expectations of good earnings results. However, if earnings results turn bad, inflation increases above 8% or oil prices increase increases above $120 per barrel, all of these factors could have the potential to push Nifty towards 16,800. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.